On today's episode of Elevate Your Wealth, are you someone that's maybe accumulated and you're a little scared to start spending? What about a recession? Questions you may never have asked but you're concerned about. And then how much the average retired person spends per month. That and so much more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins. They have a combined years of experience at 42 plus years in the retirement planning business, helping hundreds of their clients get ready for their retirement. They're certified financial fiduciaries, and you can find them at Elevated Financial Management, the power behind this program. I'm Morgan Patrick. It's my pleasure to go back and forth with the gentlemen each and every week, and we hit the latest articles that are out there, and they pertain to retirement, the importance of having a plan, being proactive. But we not only talk it, we walk it. We give you an opportunity to get on the calendar with Elevated Financial Management and talk about your individual situation when it comes to retirement. And that is coming up. These are complimentary appointments. But gentlemen, before we dive in on our first article, Casey, we'll start with you. How was the week?
Oh, it's been good. Yeah, we've been really busy. Again, I'll mention that we're still training some new folks, which is really exciting. We're working on different air times for the TV show as well. Things have been going really good. It's been nice. The stock market has been crazy, right? So we are going to talk about that today too. And we got some nice client stories. I will say one thing before we get into it. My mom retired last week, and I'm really
congratulations,
excited for her.
Mom.
Yeah. She retired, and it's really cool to see. My dad's been semi-retired for a couple years, but he's still pretty active, doing lots of things. But it's cool. I'm excited for my mom. She doesn't know I'm talking about it on radio, but she'll find out soon enough. It's really fun to see, and it was cool. I got to play. It's a different circumstance for me because I got to play a little bit of a part in my parents' retirement, right, as their retirement planner. So that's kind of a unique circumstance that I don't think a lot of people in the financial world really get to experience. So that's pretty special for me. I'm really excited for her. She worked for the same company for 45 years.
Wow.
She's as loyal as they come. She's a hard worker, and I'm super proud of my mom. So it's really exciting.
That's a great story, and it does add another layer to the planning process when it's your parents.
Yeah, exactly. Yeah.
But certainly there's a whole lot of trust there, and that's so important when it comes to planning for your retirement. Working with somebody that you like, right? Mm-hmm. You like sitting across the table from them. You like having the annual or biannual meetings to talk about how your plan is going. And that, again, we end up having this conversation almost every week about so many of you that are sitting on portfolios and haven't started planning. The opportunity to get on the calendar with Elevated Financial Management. It's ongoing during the course of this show. Take advantage of this opportunity. You're leaving the checkbook at home. You're not agreeing to become a client. They're not agreeing to take you as a client. This is a way to test drive Elevated Financial Management. All you've got to do is call 866-668-3625 to grab one of those appointments, 866-668-3625. And again, you're leaving the checkbook at home. So, gentlemen, before we dive in on the article, I got to ask Mark, man, how was your week?
It was really good, too. It's kind of, the Mariners are back playing baseball. I think we all love that up here. One of these days, they're going to make it to the World Series, and hopefully it's going to be this year.
No, they're going to win the World Series,
well,
okay? Hey, they're not just going to make it. They're going to win it, baby.
I hope they get there.
That's right.
That's all I'm going to say about that. And
you got to believe, brother.
Get in the postseason, and anything can happen.
Yeah, that's right. We've been saying that for like 45 years now.
No negativity.
But we do have a wonderful client that I truly appreciate her. She is an attorney. She has been a season ticket holder forever. In fact, it was because one of the main reasons she called us is because Casey started talking about the Mariners, and she loves the Mariners. So that after she listened to us for a couple of years, she came in, and she is a wonderful advocate for our firm now. She's so appreciative of the fact that we've helped her with all the hurdles that she's dealing with when it comes to retirement planning, and it does start with income. Mm-hmm. I can't overemphasize that. People, we have so many clients that come in and they've got a nice portfolio, as you were just mentioning, Morgan. And Casey and I talk about it all the time. It's great to have a portfolio, but try and take that into a McDonald's and get a cheeseburger with it. It doesn't happen, right? So what is the reason we save in our 401k or our IAR accounts or our 457 plans, 403Bs? It doesn't really matter, but we save it to turn it into income. And once you realize that at the end, that this is the true goal, income, it changes everything, because people tend to not want to spend a lot of times. They're so worried that they're going to run out of money. They could have $1 million in that 401k plan. They got $5,000 a month coming in income, but then they don't ever want to touch the million, right? Their life gets pared down to the $5,000 a month, and then they get sick or they pass away and they got the million that's grown to $2 million, and they never touched it because they were so afraid of running out of money. And that's what we want our clients to know and understand, that there's a way to touch that money, turn it into income that they can't outlive, and really live the retirement that they hoped and dreamed it was going to be like. But they need to believe, upstairs especially, that they're able to do it.
Yeah, I think that's the thing, right? Is so many people are just unsure that they, number one, can retire, and number two, okay, I can retire, but can I really start spending the money that I have? Because there's all these what ifs, right?
Can I have the steak sandwich as opposed to the cheeseburger? Can I go for the big steak
Yeah,
sandwich?
exactly. Get a little upgrade there, right? The prime rib dip, that sounds pretty good, as long as we're talking about steak sandwiches. I'm hungry. But I think that's it, right? Is people are scared to spend, and for years, every retirement study, the biggest concern on people's minds is, have I saved enough for retirement? Which is really another way to say, can I spend the money that I've saved, right? How much can I spend? How do I make sure that it lasts? All those things. And so, that's really this first article that we've got here, comes from Kiplinger, and it says, are you a retirement millionaire who is too scared to spend? You know what? We meet a lot of retirement millionaires, 401k millionaires, folks that have worked hard, that have saved well. And we're very fortunate to be able to help folks like that all the time, right? We spend a lot of time putting things together for these types of people. But the ones that come to us that already have a planner, a lot of them are in retirement and they're afraid to spend. And they've got millions of dollars, but they don't know how to spend because they never truly got a retirement plan, right? They've managed investments, and the investments have done well when the market's done well, but especially right now with recent market volatility and things like that, and fears of a recession and tariffs and all these types of things, it freaks people out, and they're worried as to whether or not they can spend. And the reality is a lot of what you and I do, Mark, is show them that they can, right? We show them that they can. We show them a way to do it, and we show them to do it in a way that's different than what they've been doing, right? It's not that there isn't different things or different tools or things like that. There absolutely is. But a lot of what we do is structure things so that people can go live their retirement and enjoy it. And I see you smiling, Morgan. You got something to add. What's going on?
I think it comes down to a conversation we've had before. I mean, our whole life we're conditioned to put the money away, put the money away, put the money away for put it away on the rainy days, so when the sun comes out, which is going to be our retirement, so we can enjoy it. And then all of a sudden we get to the sunny day and we don't know how to do it.
Right.
We want to, but it's almost like now we have spending habits that we have created over time. It's hard to break from those habits.
In fact, it's funny you mentioned that, because I love this one sentence. It says, many retirees don't spend enough. I mean, that's it. They've got it, but they don't want to spend it. They don't want to touch it because they're afraid they're going to run out. But it's amazing how many of our clients that we set up with wonderful income streams that are guaranteed, and we've never had one come back and say, you know what, Mark and Casey, you've created too much income. Can I give some of that back? It never happens. It's the other way around. It's when they don't have enough income that ends up being a problem. That's where it's an issue. And we want them to know that they can do it, and that's the bottom line.
Yeah, and so this article brings out a couple things, right? One is to play out the scenarios, right? Because the fear of running out of money, this is a quote from the article, the fear of running out of money can be paralyzing, especially when the stock market goes south. That is absolutely the case. And even when the stock market is on fire to a positive side, when it's growing as it has for the last 13, 14 years, people are still afraid to spend because ultimately you're worried about outliving your money. And we get it. That is something to be worried about, right? Especially when you don't have the investments set up in the right way. And so you want to play out those scenarios. You want to be very purpose built. This is the type of planning that we do. It's purpose built. It's purpose driven, meaning that if we have a concern of running out of money, we need to take a certain number of dollars and allocate that towards creating income. If we're worried about long-term care, then we take a certain amount of money and we position that to cover long-term care. All these different parts and pieces have to be a part of the plan. And so that's really what it is that plan gives you the confidence to be able to go and spend and make sure that you can enjoy the retirement that you want. So that being said, now is your opportunity. Pick up the phone, give us a call. We will put together a written financial plan just for you based on your individual circumstance, based on what your goals are and what you would like to do in retirement. We'll talk about taxes, risk, long-term care, all the things that we talk about on our shows. Don't hesitate. Pick up the phone. Call us now.
Here's the phone number, 866-668-3625. That's 866-668-3625. Again, if you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. And again, you're going to walk out with a written financial plan, and there's no obligation. 866-668-3625. The latest articles on retirement, everything you wanted to know about a recession but were afraid to ask. Well, we're going to talk about it next. We are back on Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. You can find them right here in Seattle at Elevated Financial Management. Check out the website. It's a great resource for you. EFMNW.com. All letters, EFMNW.com. There are links to the TV show. Our radio shows are in podcast form. Just really good information on retirement. You can find out more about Mark and Casey and the team. 42 combined years experience between these two certified financial fiduciaries. And when I say team, you are growing, guys. And before we dive in on our next article, I tell you, having a firm that is living and breathing right here in Seattle, and you guys are growing to serve your clients.
Yeah, we are. We've mentioned it on the show a few times. We mentioned it when we started the show that we've hired some folks recently, and we are growing, and it's very exciting. There's some growing pains, of course, right? Same as anybody.
Sure.
But it is really exciting. And, Mark and I just wanted to take a minute to say thank you to our listeners, not only to the listeners, but especially to our clients. We know that we are in a very trusted position to be able to manage people's retirement nest eggs, right? I mean, that's not a responsibility that we take lightly. It's something that we talk about a lot. And it's something that we talk about around the office quite a bit, but maybe we haven't done as good a job as sharing that on the show of how appreciative we are of the people that we get to work with, that we get to serve, that have the trust in us. And it's really exciting. And, we have a lot of clients that listen to our radio show regularly. So for those of you that are listening to this right now, thank you so much. We really do appreciate it. It's been really nice to see the growth of the business, to your point, Morgan. And as I mentioned, we've been able to hire a few people, but it's really special because we get to touch a lot of people's lives and we get to have an impact. And I think sometimes the part that we play in that is bigger than we realize. But we have a lot of folks that come in that are worried. They're stressed out. They're concerned. Even when the market's doing well, they're freaked out about what's going on. And so we help put those fears to bed and help let them go live their retirement without as much of a concern. I don't think the concern will ever completely go away, but be able to go live their retirement and enjoy it without being freaked out about what's going on in the market. And so, that's an exciting thing for us. And then same thing, because we've grown so much, we've gotten to hire some people and to see the positive impact that we get to have in their lives too, right? Because like, for example, Kelvin, he just had a baby. And so we get to help have a small role in all of that and support him, supporting his family, right? And we've added Maggie at the front, and we've added Mike recently and Phil, and so with all of that, it gives us kind of a cool platform to be able to mix into a lot of people's lives and have a positive impact.
Well, Mark, I want you to obviously comment as well, but I mean, you've been there, you've seen this transition, this transformation at the office and helping Seattle retire, but that's got to be a feel good for you.
Yeah, in fact, he mentioned, Kelvin, it's nice to have a CPA in our office now, too. Tax planning is a big part of what we do, but I just want to echo what Casey said. It really can't be overemphasized. We love this because we can see the difference that we're making in our clients' lives. I think that says it all right there. And when clients send us cards or flowers or whatever, that a bottle of bourbon, can be nice too. And we've had that
especially
done.
A bottle of bourbon.
Yeah. Exactly. We love to be a part in our clients' and lives, their children's lives, and even grandchildren now. So again, this is something that we never want to take for granted. And I just want to echo what Casey said. We truly love our clients. They are part of our family. And, we just want them to know how much we care. And again, I just want to send out a big thank you as well for everybody that's put their trust in us, because we know it's something we are never, ever going to take for granted.
Yeah, I mean, so many of you out there are struggling with what's going on. We watch, I call it financial pornography. You watch the market, it's just up, it's down. A lot of our retirement is in the market. We're concerned. So, yes, we get it. This is urgent. And if you're out there doing this yourself, or you're just out there building that portfolio and haven't got a plan, it can be nerve-wracking. Can't take, as Casey said and Mark has said many times, you can't take it 100% stress out, but you can certainly relieve a whole bunch of it by having a plan. And the big word that a lot of people are throwing around, guys, is recession. Just your thoughts. I mean, the latest article, everything you wanted to know about a recession but were afraid to ask. I mean, people are very nervous.
Yeah, people are, and we see that. It's really noticeable in this article, but gosh, I mean, just think about what's running around in your mind throughout the day, the things that pop up on your phone, what your friends and family have to say. It's not just you. Everybody's seems to be nervous at the moment. And there's a couple quotes in this article that I thought were really interesting. Let's see. It says here, this is a quote from Chairman Jerome Powell. I just think uncertainty is remarkably high. And then the article points out that uncertainty has descended like a fog over the economy. And it's interesting, that uncertainty seems to give people certainty that things are not going well, right? It's kind of strange how that plays out. But we get it, right? We do. We understand. And there's a lot of things happening all at once. I mean, we really are in unprecedented times, right? It's not a housing market crash. It's not a .com bubble. It's like 4 or 5 different things kind of all at once, and 4 or 5 things that we haven't really been through before, right?
Sure.
And so the question is how do you stay successful in retirement despite what's going on there? And if you've been listening to the show for any period of time, you know what the answer is. We're going to say it's to have a plan, right? There's another piece to this that I thought was interesting. This quote here, it says, this diminishing confidence among both corporate bosses and American shoppers has raised the risk that businesses and consumers pull back at the same time. This would dramatically weaken the economy because everyone stops spending and investing in new factories. That's a potential, right? I mean, we don't know what's going to happen, and we're not stating information in support of or against anything, but really it comes down to finding a way to invest the right way, to have that plan, because all of these possibilities, all these things that get talked about, they are very real possibilities, right? I mean, each and every one of them. I mean, some of them are maybe more extreme than others, but you watched the stock market recently, and it's had some great days where it's done really well, but it has had some horribly fantastic days, right? Or fantastically horrible is maybe the right way to say it, right? And on top of that, fantastically horrible weeks. So, there's a lot of uncertainty, and we get it. We understand why. Are we approaching a recession? Are we in a recession? There there's a lot of soft data, which is in reference to questionnaires and the people's feelings and how people are perceiving information. But hard data has not truly shown that yet, but it may be coming, right? And so we just want to encourage everybody to take a breath.
Yeah.
And if you do have questions about what's going on, we are absolutely a resource for you. If you have an advisor, ask them. Ask them what their thoughts are. Ask them to help you build a plan. Ask them to help you be successful, even despite what's going on. Ask them all those things. And if they don't have good answers, well, then you know who you can call. But ultimately, you've got that. You should have that resource if you have a planner. And if they don't have answers that to your questions that satisfy, that's a cause for concern, because these are people that are put in a trusted position that are there to help you be successful. And don't take that for granted. That absolutely gives you the authority to ask them questions about what's going on.
One of the things I want to add to that is that, there's been, over the last couple of years, there's been a lot of information that didn't pan out about a recession, right? So we're not saying one way or the other because we don't know. That's the thing. We don't know. But there's seems to be a lot of flashing red lights right now. In fact, this one comment was made by a chief economist where he sees the odds of a recession at about 40%. And the normal amount of people thinking that is at about 15%. So you can see now whether he's going to be right or wrong, we don't know. But there's a lot of things happening. Like Casey said, the tariffs right now, Trump's tariffs are adding a big time concern. They think the average car price will jump $5,000 to $6,000, and it may be painful on the front end, but the thinking is that it's going to bring back more production here, right? But we don't know that yet. So again, there's so much uncertainty. That's what the problem is. So with a plan, we're not going to really have to worry about that, right? Because we want to have a plan that we can't say is totally recession-proof, but if we get income set up and we're not having to take money out of what we call the stocks, the red money, then that can really help, because a lot of people that are trying to create guaranteed income at the same time as the stock market's going down create sequence of return risks. So please, if you're out there today, you're worried about the economy, you're worried about where your income is going to come from, what are you going to do with your taxes? Please pick up the phone, give us a call. Call us and let our team here at Elevated Financial Management put together a plan that will truly benefit you and help you deal with any economic cycle that happens to come in the future.
We get it. Change is scary. And recently there's been a lot of change, and it's come really, really fast. People are nervous. Having a plan will calm some of those nerves. Can't calm them all. But certainly have a plan for what is your future, your retirement. Call this number now, 866-668-3625. Grab one of the complimentary appointments we're offering right now. You're going to walk out with a written financial plan. You're not agreeing to become a client. They won't try to sell you anything. They're not agreeing to take you as a client. This is an opportunity for you to test drive Elevated Financial Management. Call now, 866-668-3625. When we return on Elevate Your Wealth, it's time for more cutting-edge articles when it comes to retirement. That's next. Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. You can find them right here in Seattle at Elevated Financial Management. They've got over 42 years combined experience in the retirement planning business. They're certified financial fiduciaries. It's all about helping Seattle get ready for retirement. I'm Morgan Patrick. My pleasure to be here and talk retirement each and every week. We now are going to pause, not really pause, we're just going to take a little bit of a break and talk about some client stories that have come into the office. And guys, take it away and just tell us a little bit about the client and how you helped them.
Yeah, there's a couple stories that come to mind, and we really enjoy sharing these because it's very fun for us to get to help folks do what they want to do in retirement. So I'll share one, Mark will share one, and we'll probably be reminded of a couple others as we go through this. The one that kind of came to my mind is a little bit of a shorter story. But we have a woman that came in to see us, and gosh, did she hear us on radio or did she come? I think maybe she came to a retirement workshop that we teach So we teach at 4 local colleges. You know this, Morgan. We teach at 4 local colleges, and we teach retirement classes there. And so I believe she came to a class, and she came in to see us after the class, and she'd kind of been working part-time, but really just was unsure if she could retire yet. She's in her early 60s, 63, I believe. And so a couple years before full retirement age for Social Security. She's not going to have a pension, but she's done a nice job saving. She's done a nice job saving, saved a pretty sizable sum. And really just kind of curious, do I need to keep working? How can I make all this work? If I do retire now, what do I do for health care before I get to 65?
What kind of options?
Yeah, right. What are the options? What do I really have to do? And so for her, she came in, we did our analysis. We don't like to make recommendations on any investment changes until we've done an analysis on the investments that somebody holds. And so we did that, and we showed her that with making the right adjustments, she could retire now, and she's actually going to have more income in retirement than she has for the last 5 or 6 years working part-time. And so she's going to have her Social Security. She'll have income from her investments. She'll still have assets allocated for growth, but she'll also have assets for income. And it's really cool. She actually, so I'm a Mariners season ticket holder. We talk about that on the show, but I was at opening day recently, and she asked me if I could get her tickets to opening day too. So she was at opening day as well. And so we connected while we were at the game. I got to meet her daughter. And
wait a minute. You're a player in Seattle. You got tickets?
Yeah. Oh yeah.
Oh, I got tickets. I got connections.
Yeah.
I love that.
Yeah. No, I love the Mariners. Mark and I both do. We love the local teams, and we're both local guys, right? I mean, we live right in this area, and I've lived here my whole life. Mark has lived here for 40 something years. So, we're both local guys. We love supporting the local teams, and it's really fun. It's nice to have a client like her that I was able to meet her daughter, and just, it kind of feels like family. It really does. It feels special. And again, right, this kind of comes back to the gratitude that we were sharing in our last segment, that we really appreciate the piece that we get to play in people's lives. And so, the reality is that's her story. That's not a story of us saving the day and being heroes. That's a story of her saving well for retirement, right? That's a story of her working hard for 40 years to save the money that she saved to raise her daughters as a single woman, and to have gone through a divorce that she went through, all these things. But she's still found a way to be successful, and she's going to have an awesome retirement, and we're excited that we got to play a small part in that.
Well, the saving part is that foundation. That's what you build off of.
Yeah.
Love
So that was great. That was great for us.
Yeah, in fact, I've got a client that we're helping right now, and she's in a totally different situation. She's kind of doing some crisis planning right now from the standpoint that her husband is now in a assisted living facility with his dementia's gotten much, much worse, and so she can't care for him at home anymore. Wishes that she would have started this process a little earlier.
Sure.
She's out of runway now, right? And the problem with that is, and nobody thinks that that's going to happen to them, right, until it does. And then your options can be very, very limited. The other option she's facing is she's 80 years old. And so what we're doing is, one of the things that I just want to share with everybody is you got to make sure that your powers of attorney are up to date. I can't overemphasize how important this is. And even if you're an attorney out there, a financial planner, an insurance advisor, you need to get your own too and make sure they're up to date, because you can have a big impact on your clients when you show them this is what I've done. And you don't need to be, durable powers of attorney are not just there for old people. A car accident can happen. We could have a traumatic, brain injury. Things happen to where we're going to need somebody to speak in our behalf. And that's happening right now with this client that I'm talking about. And so there's some things that we are doing to help protect real estate that she owns, but she's also a planning client. And I can't overemphasize. See, there is a difference between a durable power of attorney and a springing power of attorney, or can also be known as an immediate. Now, you have to trust, if you're going to set up an immediate power of attorney, you're going to have to trust the people that you're going to make your agent, right? Which could be a trusted child, a trusted friend. But the difference between a durable and a springing or an immediate power is dramatically different. A durable, you're going to have to basically get, in our state here in Washington, you're going to have to get 2 doctors that will sign off that person that you're wanting to speak for and handle their financial issues or the medical issues for. They have to be incapacitated, and 2 doctors have to agree. Sometimes that may be lickety-split and easy, but most of the time it turns out to be quite a burden. And so we tend to lean toward more of an immediate power of attorney, so that you don't have to go through that process of getting doctors to sign off that they are incapacitated. But the risk is you better trust them, right? Because if you don't, they can go into your bank accounts, brokerage accounts, and other accounts and handle business, which means they could transfer assets in and out. So you need to know what you're doing. But having a power of attorney when something happens is, I can't overemphasize how important this is. And a lot of times we want to put it off. We're procrastinators by nature, and that can backfire bad.
You know, I think something that comes with that power of attorney that is really important is there's a lot of folks, as you mentioned, Mark, that will say, well, you know, it's not going to happen to me, or if it does, it's years away, right? And maybe you're realistic enough to think, well, I know that something like that could happen. It's just not this year, not today, not tomorrow. You know, that's a long time down the road, right? But it's something, that power of attorney, you don't need it until you need it, and then
Right.
you really need it, right? It's kind of like, I mean, if you're doing a project around the house, you're working on your car, and there's that one special tool, right? There's that one special tool that you need to do something. And that's the only thing it's good for, is that it's not a screwdriver. You can use it for, you know, all kinds of stuff. It's that one special tool, and it only fits in that one specific application. It only works on this car, or only works in this circumstance. And you don't need it at all until you need it. And if you don't have it, it completely stops the train in its tracks. Yeah. And the power of attorney is the same thing, right? It's something that you need, but if you don't take the time to put it into place when you need it, it's not going to be there, and everything will come to a screeching halt. And then what happens is, not only do you, as the person who needed that power of attorney for yourself, you no longer are maybe getting the care as quickly as you need, or the help as quickly as you need, because all these other things have to be put into place. But now the loved ones that are only trying to help you are scrambling. They're left scrambling to try and help figure this out for you, and make sure that, you know, things can go the way that they're supposed to go. So the reality is this type of planning, whether it's power of attorney, income planning, retirement planning, tax planning, all these things that we talk about all the time, they're all very, very important pieces to the puzzle. And you've got to take the time to get them put into place, because it's a little bit of work up front versus a lot of work and stress and heartache later.
Yeah, pre-planning. I mean, what's the old saying? I mean, you don't have a problem until you have a health problem. And then it's front and center. You have to deal with it. Pre-planning, getting ahead of it, having these conversations now, as maybe uncomfortable as some of these conversations might be, but to sit down and include it in your planning process. You talk about confidence as you move forward. When somebody asks you, you know, what are you doing for long-term care? Have you thought about how you're going to handle your health care as you age? Oh, yeah, it's in my plan. It's part of it. We took the time to kind of sit down and get this taken care of. You know, that's that peace of mind we talk about, guys.
Yeah, in fact, it's funny you mentioned that, because some folks will put a trusted child as a joint tenant with them on their accounts, right? This can really backfire too. I want to just talk about this for a moment, because if you do that, and let's say you've made your daughter, like my youngest is married to Casey, right? And if I put her on as a joint tenant with me because I trust her to go in and handle business if mom and dad were maybe in a bad car wreck and we can't speak for ourselves. But here's the danger. Let's say Cammie is in a car accident. She ends up killing someone. The attorneys can look at the account as hers, and it's not. It's mine and my wife's, right? But they could come after that money. And so why take on that liability if you can do it with the power of attorney? It takes all of that risk for that possibility happening off the table. And so you want to know what you're doing and why you're doing it, because sometimes we just make an emotional decision and it can backfire on us bad.
Yep, it can, right? So that it just takes a little bit of planning. Now, Mark, are you saying that Cammie's not a good driver? Is that what you were getting at?
Not at all.
Wow, don't go there.
On the radio, he would
Don't
say
go
that?
there. Heated dinner coming up.
Not at
all.
Not
You
at
know
all.
what I
Not
mean.
at all. No, I know exactly what
Accidents
you mean.
happen, right?
They do. Yeah, they do,
Yep.
right? And that's the thing, right, is really you're doing something with the right intent. It's just the wrong method to get to where you want to go. And so with that, we see that all the time when we do an analysis for people that come in from radio or TV or from a workshop. We see this all the time where people have the right intent for their retirement planning, but they just don't know the right method to go about it. So if that describes you, this is your opportunity to get a written financial plan. You'll come in, you'll have a conversation with me, with Mark, with our team. We'll talk about how you're currently invested and what you want to do in retirement, what your goals are. And then we start to make recommendations about how to make that happen. This is a custom tailored retirement plan just for you. Don't hesitate. Pick up the phone. Call us now.
Here's the phone number, 866-668-3625. That's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. And again, there's no obligation, cost-free. Leave the checkbook at home. You're going to walk out with a written financial plan, 866-668-3625. When we return on Elevate Your Wealth, here's how much the average retired person spends per month. Wouldn't you want to know that number? Well, we're going to tell you what it is when we return on Elevate Your Wealth. Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management. Check out the website, efmnw.com. Again, all letters, efmnw.com. There are links to the TV show. Our radio shows are in podcast form. There's just really good information on retirement and the importance of having a plan. And between Mark and Casey, 42 plus years combined experience in this business, helping their clients get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick. We are hitting the latest articles when it comes to retirement. We're going to start with this one in this portion of the program. The average retired person, and we're going to say it's a national average, not a Seattle average, but a national average for a retired person and what they spend in a month, and will it be enough, guys?
Yeah, this is something that I think is going to be a great segment for those that are listening today. I think that's the biggest concern we have when we go to retire is how much are we going to have? Because, when you retire, two things change. You have more time, but now you don't have a paycheck, right? So how do I replace that paycheck? That is so critical to setting a retirement up. We've got to know what our income is, which means we need to know what our spending is. That's one of the things Casey and I put in all of our kits that we do when we teach a class. It's something we talk about on radio and television. You don't want to just wing it, right? We need to know what our budget is. Now, a reality that we run into with a lot of clients is they flat tell us, well, I've never really lived by a budget. And that's okay when the income is just flowing in, right? And you kind of maybe track it a little bit each month, but you don't really worry about it. Well, in retirement, that can be an issue. And so we want to know what our cash flow is. And so figuring that out is going to be one of the most important things. But an interesting thing about this study was that in the United States, on average, the average retiree is spending about $5,000 per month. Now, I will say this in Seattle.
Not around here.
Yeah, that's a low number. It's going to be a struggle if you've got only $5,000 a month. There's no two ways about this. So, maybe you've got a gap. Maybe you've got $5,000 a month coming in Social Security and a small pension, right? But if you need $8,000, the key is how do we bridge the gap? How do we fill that? And that's one of the things that Casey and I work very hard with our clients is, especially if they retire early, let's say at 62, we don't want them to turn their Social Security on yet. So how do we get them to, let's say they were born 1960 or later, their full retirement age is 67. So how do we close or bridge that 5-year gap? That's one of the biggest things that every retiree is going to have to get figured out. And they need to be working with someone that understands the tax implications of what buckets they want to draw from and when. So there is truly a lot to this type of income planning, and it matters to know who you're working with and that can really specialize in helping bring these clients down the mountain.
You bring up just the average in that 5,000 per month, and that's the number. Seattle obviously going to be a little bit north of that. But how important, guys, is it when you meet with a potential client or even a current client to talk about expenses before they get to retirement, talk about the money that's going out before they get to retirement, so they kind of have an idea of what's going to be sucked out of those accounts every single month when the paychecks stop?
It's really important. And I think it's something that a lot of retirement planners or investment advisors don't do, right? We actually have a budgetary worksheet that we've put together for clients just to help them have the conversation and start to figure out what they're spending on. And you know, everybody kind of gets freaked out about this budget word, you know, like, well, I've never lived on a budget. Well, you have, right? You just haven't lived within a budget, but
Right.
all of us live on a budget of some kind, right? Because our income or our assets are not unending, right? So we all live on some kind of a budget. If you make $6,000 a month, you're living on a budget of $6,000 a month, right? If you make $60,000 a month, you're living on a budget of 60. I mean, there's a budget in there somehow, right? Now, maybe you have not always lived by like a line item budget, and I can only spend X amount on this thing. Because, you know, the reality is this, we see this all the time. It's called lifestyle creep, but we see it all the time where, you know, when you're first starting out and you're 20-something years old, you got your first job and you make $30,000 a year, somehow you find a way to live on $30,000 a year, right? Mm-hmm. And then you get to 25 and, gosh, man, now I can make $40,000 a year, right? Well, somehow you don't save $10,000 a year. You just spend $10,000 more. And then you get to 40 and 50 years old and you live on $100,000 a year or whatever it is. And again, you don't really save the difference. Your lifestyle just increases. And that again, that's called lifestyle creep, right? So we see that all the time. And the thing about it is it's good and bad. It's bad for the obvious reasons that you're probably spending money you don't need to spend. But it's good because it means that you have a nice income and you're able to live a good life and all those things. But ultimately, when it comes to retirement, you want to make sure that that income is going to be able to support a similar lifestyle. Now, I'll add a story into this. So we had folks come in last week, and husband and wife, both high earners. And this just illustrates the point. And what I'm really trying to bring out of this is that it's unique for each person, because we're talking about an average of $5,000 a month. What that means is that 50% of the people make less than that and 50% of the people make more than that, right? So, of course, we all want to be on the 50% that makes more. So This couple, they came in and they were a referral from some wonderful clients that we have. They came in, they're high earners, they're a few years from retirement, and their spending goal in retirement is almost $300,000 a year. Now, for them, they have a lot of assets to be able to do that, right? And not everybody does. So again, it's very situational. I can tell you that based on the planning that we've done so far, I think they're probably going to be able to pull it off. But it does take a lot of assets to be able to do that, right? And it takes the right positioning. Now, we have plenty of clients that come in that are looking to spend $5,000 a month in retirement, right? So, you know, it really comes down to your individual circumstance and what you want to see. And so these averages can be deceiving, right? Because it's what I want to be very clear. What we're not saying is plan to spend $5,000 a month in your retirement and you'll be okay. That's really not what we're saying. That's the average. But the point is, make sure that your plan is built in such a way that you can continue with your lifestyle despite what's going on.
Yeah, there's something that I think might help. You know, we'll have clients that'll do the budget for us and they fill out their sheet. But one of the things that I'm a big believer in is having a client make sure they have maybe a spiral notebook in the purse, the husband, the same thing. And for a month or two, you write down everything when you spend it, right? If you get a sandwich, a coffee, a Starbucks, pay a bill, you go to the grocery store, you track that. Because what we found is when they give us that number versus what the number was that they wrote down, what do you think? Is it usually lower or higher? Their spend rate is higher than what they gave us. And that's really when you find out, that's where the rubber meets the road, right? Because that's a lot closer to a real number. So I highly recommend people try that, because you might be very surprised of what you're really spending.
You know what's nice about that too is it creates a lot of pain.
Yeah, exactly.
It's really painful. It's one thing to go to Starbucks and pull out your credit card and you tap it on the thing and you just go, okay, cool, and you click the button and you sign, and that's great, right? But there's no pain associated with that, or more than likely you have the app on your phone, right? So you don't even have to pull out a credit card or anything. But there was a time, and we all remember this, where you had to get cash out or you had to get a check or something that required you to do something. So you were cognizant of the money that you were spending, and writing it down in a notebook is horribly painful, and you will be very clear about where you're spending by the time that probably by the time that 1 week is over. You'll be like, man, this hurts, right?
Well, and I think you guys, when we started off the show talking about baseball, this is perfect, because I think when it comes to the money that we think we spend, we're kind of in the ballpark, so to speak.
Yeah,
But when we dial it into the seat that we're in, the section that we're in, and also the season ticket holders that are sitting around us, I mean, we kind of know exactly where we are. When we start doing that with our budget or our spending plan, that's the real eye opener. And you may find out that, you got gaps. So covering the gaps, that's what planning is about. I mean, you know what you have. You know if you're going to fall short. Like, you helped a client, hey, they're going to be able to do what you said, what they wanted to do. But there might be a client that sits across from you and say, you know what, we got to do some more planning. You got some gaps here.
Yeah, we do see that quite a bit. There's something interesting in this article. It's talking about average monthly expenses for retirees, and there's this one. It says transportation, right? That's one of the bulleted points here of things that folks spend on. And then it says, while commuting expenses drop in retirement, right, retirees can still spend on vehicle maintenance, insurance, fuel, and recreational travel. Your commuting expenses may not drop. There's a lot of people now that work from home that didn't used to work from home, right?
True.
So maybe your commuting expenses don't change, but your overall vehicle expenses go up, right? So has that been factored in? If you want to take road trips and do those types of things, your expenses are going to go up, right? So again, it's very situational, and these are all things that we have to talk about, at least to some level of detail, to make sure that the numbers that we're using as far as income goals and all that go, to make sure that there's a high level of accuracy with them, so that when we put together this plan, we know that it's going to be successful.
Well, it's a perfect story, guys, because when you talk about averages, that throws a blanket on everybody. Everybody's different, right? They're different in Seattle. They're different in Chicago. They're different in New York. They're different down in Miami. They're different in Dallas, Texas. They're different in L.A. Yep. And their numbers are going to be completely different from your numbers. So having a customized plan that takes into account your situation, that's what we talk about every week.
Yeah, and if you're listening today, please pick up the phone, give us a call. You're going to keep your checkbook at home. All we want to do is have a conversation. Maybe you are worried about where your income's going to come from each month. What about taxes? Have you thought about that? How important is strategic tax planning to your overall success? What about long-term care? These are just some of the things that we're going to talk about with you, and we're going to look at your specific situation as we've talked about. So if maybe you're getting ready to retire from Boeing, or you have recently, or any of our other companies, please pick up the phone, give us a call. Let our team put together a plan that's going to show you that you can be very successful in retirement and cut your stress level way down because you picked up the phone and you gave somebody a call that might be able to help.
Get some clarity when it comes to your retirement situation. Call this number, 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. This is a complimentary appointment. You're going to walk out with a written financial plan, and there's no obligation. You're not agreeing to become a client. They're not agreeing to take you as a client. Call this number. Grab an appointment right now, 866-668-3625. Another edition of Elevate Your Wealth is in the books. For Casey and Mark, I'm Morgan. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.